Good morning, everyone. Our 2021 fourth quarter results show a glimpse of the future of our KBC Group. We continue to implement our strategy with a clear focus on innovation and digitalization, leading to further growth. On the sustainability front, we continue to increase our positive impact on society. At the end of 2021, the macroeconomic and financial outlook remains challenging as the pandemic heads into its third year. However, progress in booster vaccination and antiviral treatment in many countries may mitigate extreme overburdening of the health systems and hence avoid the need for comprehensive and long-lasting lockdowns. This has translated into growth in customer loan and deposits in our core markets and increasing and massive use of our digital channels. Both the number of transactions and digital sales are growing. KBC is increasingly becoming a data-driven organization with our personal digital assistant Kate at the core. Kate is helping more and more customers in Belgium and Czech Republic to make their lives easier. Together with our efforts in improving customer service, this has translated into a strong Net Promoter Score. We are among the top performers in the majority of retail markets we operate in and number one in Belgium. Satisfied customers generate higher revenues, and this is reflected in our results. We generated a net profit of 663 million euros in the last quarter of 2021, an excellent performance driven by all our business units in all countries. Total income benefited from higher net interest income and net interest margin, higher sales of life insurance quarter on quarter, excellent sales of non-life insurance year on year, higher net fee and commission income, and increasing assets under management. All of this was partly offset by small net losses from financial instruments at fair value and lower net other income. The discipline on cost was maintained, and as a result, operating expenses in the full year 2021, excluding bank taxes, changes in the consolidation scope and one-offs, rose by 1.5% year on year, which is fully in line with our full year 2021 guidance of slightly below 2% increase like for like. For the full year 2021, our cost-income ratio, excluding bank taxes, amounted to 51%. Loan loss impairments remained very low. In the fourth quarter, previously recorded COVID-19 impairments were partly reversed. Adding the result for the fourth quarter to the one for the first 9 months of 2021 brings our net profit for full year 2021 to 2,614 million euros. Our return on equity is solid at 15%, and our liquidity ratios remain well above the regulatory minimum. Our solvency position remained very strong too, with a common equity tier 1 ratio of 15.5% on a fully loaded basis for KBC Group and 201% for KBC Insurance, well above the regulatory minimum of 8.31% and 100% respectively, and after deduction of the dividend proposal. The growing number of customers, the increased digitalization and profitability translates also into remuneration for our shareholders. Our board of directors has decided to propose to the general meeting of shareholders in May of this year a final gross dividend of 7.6 euro per share, bringing the total gross dividend to 10.6 euro per share. As far as the future dividend and capital distribution policy is concerned, as of 2022, on top of the payout ratio of at least 50% of consolidated profit, each year, on the basis of the full year results, the board of directors will take a decision at its discretion on the distribution of the capital above 15% fully loaded CET1 ratio, the so-called surplus capital. The distribution of this surplus capital above 15% fully loaded CET1 can be in the form of a cash dividend, a share buyback, or a combination of both. In the fourth quarter, we further optimized our geographic presence as we reached an agreement to acquire the Bulgarian operations of Raiffeisen Bank International. This investment into a high-quality business with an excellent reputation will allow us to further strengthen our leading position in the Bulgarian financial market. Its clear focus on innovation and digitalization, combined with a higher customer satisfaction rating, mirrors our own digital-first strategy. As a result of the potential withdrawal from Ireland, arising merger and acquisition opportunities beyond our core markets may be assessed with the approval of the Board of Directors. As part of such assessment, we will, of course, take into account very strict strategic, financial, operational and risk criteria. European economic activity almost fully recovered to its pre-pandemic GDP level at the end of 2021. On the basis of this new situation, we are therefore proposing today our new financial targets. Between 2021 and 2024, we are aiming to achieve a compound annual growth rate of approximately 4.5% for total income and approximately 1.5% for operating expenses, excluding bank taxes. Besides that, we also want to achieve a combined ratio in non-life insurance below or equal to 92% by 2024. Besides the excellent commercial and financial performance, we also make good progress on the sustainability front. We continue to play an active role in the transition to a low-carbon economy by working together with all our stakeholders. We want to minimize our own negative impact on society as much as possible by applying strict policies and guidelines and reducing our own environmental footprint. As announced at the end of October, KBC will no longer provide credit, advice or insurance to companies for the exploitation of new oil and gas fields. We have also started offsetting our remaining greenhouse gas emissions to reach net climate neutrality with respect to our own direct footprint. At the same time, we are committed to gradually increase the share of renewable energy sources in the total energy loan portfolio to at least 65% by 2030 at the latest. We continue to focus on activities with a positive sustainability and climate impact. We have, amongst others, issued a third green bond at the beginning of December to finance projects that have a positive impact on the environment. Last but not least, KBC converted its 2 remaining Belgian pension saving funds in SRI funds. We saw very high inflows in SRI funds in full year 2021. Roughly 55% of KBC Group full year 2021 gross sales were invested in SRI funds. Our KBC Group is built on solid foundations, and that is very positive for our clients, our staff and our shareholders. I wish to take this opportunity to explicitly thank all stakeholders who have continued to put their trust in us and helped us grow. I also want to express my utmost appreciation to all our staff who have continued to serve our customers and support the sound functioning of the group in these challenging times.